I think one of the reasons why everyone is talking about Marvell Technology stock is because of the company's position in the artificial intelligence data center industry. Its revenue increased by nearly 70% in the most recently completed quarter, and one of its competitors, Broadcom, has seen its share price soar. So investors are expecting and hoping that Marvell Technology can deliver similar results like Broadcom can and see its share price increase the way Broadcom's share price has. So I'm going to share with you the latest details from Marvell Technology so you can get an inside look at the latest developments.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Marvell Technology's management team is putting fuel on the fire by saying that they expect to continue to be a massive AI opportunity in front of us by purposely redirecting our investment toward data center relative to our other end markets. And one of the ways they did that is by divesting part of their automotive business and raising $2.5 billion in cash as part of that divestiture sale. The management team will use that capital to buy back shares and make more investments to optimize its product portfolio for the data centers optimized for AI, where there's the biggest boom in terms of enterprise spending is in this market. Starting in the third quarter, they will consolidate their non-data center end markets into a new single communications and other end market. So they're basically going to say, we have this data center AI market and then everything else over there. But this is our priority, right? The data center AI market. And that's the category I've been reporting on for several years now, where companies like Microsoft, Meta Platforms, Alphabet, Amazon have said and have already spent hundreds of billions of dollars and have said that they will increase the spending next year and probably increase the spending the year after that. Interestingly, OpenAI, which mostly rents a lot of that infrastructure for AI, has also said that they will be spending hundreds of billions of dollars renting or creating that technology for use for their own self. And so this is a booming market with forecasts suggesting that growth will continue for several years more. And so companies are lining up to provide services and products to serve these markets. So Marvell now thinks this AI market opportunity is much bigger than they expected. And this is another thing I've been reporting on where the data center markets for AI, the estimates were really, really high, right? The forecasts were really high. But as time is moving forward, those estimates are being revised even higher. So this is a market unlike many others that I've been talking about, right? So a lot of times investors are fearful when there's a lot of hype and enthusiasm for a certain category that it might be overdone. And I think that's a healthy viewpoint, right? And that's one of the reasons why I was able to identify the electric vehicle industry as being one that you should avoid. I've been saying that since 2020, 2021, when stocks in those categories were at nosebleed valuations and enthusiasm in that category was really, really high. And at that moment, I was warning you all saying that that was way overblown, that investors were getting ahead of themselves, that this market is not going to turn out as all of these optimistic forecasts are suggesting. That was a bubble. That was something that I was telling you all to avoid many, many years ago in 2020 and 2021. And fast forward here to 2025, that forecast turned out to be true. If you listen to those warnings that I issued in 2020 and 2021, you will have avoided a lot of pain in the EV industry. But today, with the artificial intelligence industry over the past year or two, or a little bit more since the launch of ChatGPT, I've been saying the opposite about the AI market, how it's not a fad, how it's not overdone, it's not overblown, how there's strong potential in this category, and I wouldn't be surprised if there would be revisions even higher because I noticed the productivity benefits, the fundamental benefits that artificial intelligence is providing to business and individuals is leading to that investment. So there's an underlying fundamental benefit that's superior to the technology it's replacing that's going to drive continued investment. Whereas with electric vehicles, that technology is not better than the technology it was trying to replace, right? Electric vehicles are more expensive than internal combustion engine vehicles and more inconvenient, right? In a myriad of ways. And so that's why there was no fundamental force to lift demand for electric vehicles here in the United States, and the forecasts were way overblown. It's not the case with artificial intelligence. The technology it's replacing, the data centers that were previously based on CPUs, are being replaced with the data centers that are now primarily based on GPUs, which is fundamentally a huge improvement of total cost ownership compared to the previous technology. So that underlying benefit, that underlying superiority will continue to drive investment and spending in that category. So here you have Marvell's management team saying they now outlined an expanded $94 billion data center total addressable market opportunity for the calendar year 2028. That's a 26% increase from our prior view. So they previously thought the total addressable market for the data center would be 26% lower. Still a large opportunity, but 26% lower. But now they upgraded that 26% higher to 94 billion. And this is just one data point among many, with companies coming back and telling investors that, look, we thought AI was going to be big. We thought this opportunity was going to be big, but it turns out it's much bigger than we even anticipated. And so I'm seeing this kind of data point from many, many companies. And as you know, I follow, over 100, 200 companies. I read almost 1,000 or 2,000 of these conference call transcripts from management teams reporting to investors the progress and the latest developments in their industries. And I keep seeing more and more data points like this, where companies are increasing their expectations, increasing their spending when it relates to artificial intelligence. By the way, this specific earnings call, I made this highlighted document available for my channel members, and you can join my channel for less than $5 a month. You see the link in the description for all the benefits you get for joining our channel, and these highlighted conference call transcripts are just one of the very many benefits that you get, and there are dozens and dozens of these already available, and I'm adding to these regularly. So looking at valuation specifically for Marvell, I had upgraded this stock to a buy on September 8th when it crashed, and I felt that was a great opportunity. And since I upgraded it to a buy roughly a month ago, the market price has soared. It's up over 30% in a month. And so now the value, I think, is overvalued. It increased so quickly that the valuation got ahead of the fundamental value of the business, which I calculate to be $63. The current market price is $87. So today I downgraded the stock back down to a hold because of the rapid increase in share price. Of course, there was an increase in expected free cash flow, which I included in my forecast, but it wasn't enough to justify the 30% increase in 1 month. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.